Good morning, pregame crew. I hope you are well. Welcome to the pregame show. It is August 16th, 2023. Yes, it is Elvis Day, and it's my niece's birthday. I went to Graceland, saw Elvis's where he's buried, and the Jungle Room. Very cool. It is 6:22 a.m. Mountain Time, 8:22 a.m. Eastern Time. Welcome to the show. I'm so glad you are here. This is a show where we try to piece together what is going on in the market. Who's in control? Who's not in control? All right. Okay, that's working. Thank you, Rob. Thank you. Hey, Greg, Marvin. Hey, Tom, Rob, Marvin. I'm so glad that y'all enjoy it. Hey, Rob, Card Lady, Geo Guitar, Sam, Jody, Mike, B-Hawk, Topher. It's FOMC meeting minutes day. That is different than FOMC interest rate decision. Typically, the minutes are less volatile because we already know what's in them. We already know what the outcome of the meeting was 2 weeks ago. So just remember that. Hey, Coda, Josh, Ziva, Mal, Basque, Paul, Homebody. Hey, Nugget. Omar, hey, 1 second, y'all. Just 1 second. Sorry about that. My husband's trying to single-handedly kill me. I will die of a heat stroke. Ay, ay, ay. If he wants me to leave, he should just tell me, pack your stuff and go, instead of turning up the air every day, because it's going to run me out. Hey, Success, Fat N, Hector. It is a caution day. That's right, Tom. Caution day. I think I have some good stuff for you, and I realized personally I was mourning the setups from July. July was the best pregame prep month I've ever had in 2 years and 27 months of doing this 3 hours, 3.5 hours every morning prepping. July was the most in the zone I've ever been. And if you agree, let me know. If you disagree, let me know. August, things have changed. And the same setups that I was eyeing in July didn't work. So it's kind of like scouting the football team, the defense. The defense scouts the quarterback, and they understand the routes, and they start reading them and defending them, and then you have to change things up. We have to change the plays. I recognize that. This weekend, and I really had some, okay, how do I shake this up? And then I need to morph and transform into what we have, not what I want it to be. So July, again, was one of the best months we've had, and this is what I feel like. And the show hasn't started, I know. It'll start in 5 minutes. I'm supposed to be saying hello to y'all and warming up, and I'm already going into my spiel. But this is how I feel. And a lot of y'all have been messaging me. Y'all got any more of them squeezes? We were so hooked and addicted to those squeezes in July, and they're just not the same right now. So this probably sums up where I am right now. It doesn't mean we don't have trading setups. It doesn't mean we haven't nailed gaps on Baba, on Apple in August. We've done decently, but we need to do better. We meaning I need to do better and just stay agile. I tell y'all that at least once a month. We have to remain mentally agile because the market's constantly changing and evolving. Different participants are exiting and entering. So I may not get to as many chart requests, but oil, yep, oil has been bae. Oil has been bae for sure. And that will change too, Mal. So this is where I have to flex the experience I have and say, okay, oil's been going well now. I'm going on 7 weeks of only a couple losses in oil and probably 90% win rate. And if you've been around, you know that that's true. I'm not exaggerating. And my win rate is nowhere close to that on other setups. So I have to recognize that it will stop working at some point, and I need to size the same. Just because it has been working doesn't mean that I size up, because typically you're not going to stay in that same type of flow and rhythm with one chart more than 6-7 weeks. That's asking a lot. So I recognize that, and I'm not sizing up on my oil positions just because my win rate has been so high this summer. Okay, I hope I'm making sense to somebody. Okay, y'all just want names. Y'all like, whatever. We just want names. Okay. PSTG. Storage. Fighting to hold the daily 50 MA. Squeeze. Beautiful. Weekly high or low, the more likely scenario. Potential monthly bull flag. The more junk that we accumulate as Americans, we need more places to put it. COVID, I remember the storage companies exploding when COVID hit because people were moving in with their parents and having to move things out of their houses and into storage. It was really going nuts. And that may be what's happening now with home prices not remaining pretty resilient and up. Potential daily bear flag under the 50 MA. We do have to be careful about that. 35.93 and 35.52 are your supports. Resistance would be the high of yesterday, 37.28. Then above that, 37.30. Thank you, Trey and Mike. Appreciate it. Hello, Mr. Grugster. Good morning. Okay, I think the next name is Rost. Okay, so Rost got an upgrade. It's breaking over weekly resistance. This is a beautiful rounded bottom chart. Not a perfect rounded bottom, but we'll take it. Weekly squeeze, daily squeeze, 4-hour squeeze, popping. At this point, you're waiting for a pullback buy or first 5-minute back burner. This move extension is extended at this point, and you wanted to have been positioning somewhere in here. Overall, good looking chart. Rost, of course, this is success. He knows how to find them. Yeah, SE is pretty beat up. But dumpster diving is an art, an absolute art in trading, and very few traders have the patience and skill set to trade these type of dumpster fires accurately and safely. It's a tough trade setup. So excuse my scrolling. But I have to go way back when Jesus was born to find the next supports. So you have a gap, You have a gap at 38.76 to be aware of. 38.76, the gap fills. And your support, 35.61, and then $35 psychological. Yesterday was day one of the debacle. So typically you have a 3-day no-touch period where you wait for more downgrades to come in and the final bull to capitulate, and then you get your oversold bounce. 99.9% chance this thing will get a bounce. But timing it takes experience. You're looking at vol climaxes. You're looking at psychologically round numbers. You're looking for bull divergences. You're watching the market. It's just multifactorial, and I can't tell you this is where you need to step in. Sure, you can have an inverse trampoline pattern. I don't call those out, but basically rounded tops are pretty bearish. Yeah, hit the like button. You're welcome, N Bixby. Yeah, Bitcoin has a squeeze on the daily. It's 631. I need to get started. Yeah, it has a high compression squeeze, actually. There is some major volatility, and I covered that yesterday. Major volatility incoming on Bitcoin. Let me say this clearly. A squeeze is a directionless indicator, meaning it does not indicate which direction this will break. It just indicates that there is pressure building and there's volatility incoming. We just don't know when it's going to break and which direction it's going to break. But typically, if it breaks, you can jump in and you get decent follow through. So good morning. Welcome to the pregame show. Who am I? This is who I am. I'm Chart Gal Lori, and I'm part of the Chart Guys community. And we teach technical analysis. If you want to give me a follow on Twitter at ChartGalLori, that would be lovely. We have FOMC meeting minutes today at 2 p.m. Eastern. We have building permits that just came out, not really impacting the market. industrial production at 9:45, oil inventory at 10:30. So we have FOMC meeting minutes. Now, there will be at least 5 messages that I received today saying, what happened? The FOMC was so boring. It's not FOMC. It's the minutes of the meeting. We've already gotten Powell's conference. We've already gotten their summary, their statement, and we already got the rate hike. We already know what they did. Now, if there are some major caution words that they have not used in prior releases in these minutes, then yes, that could shake up the market. All right. Looking at ES, and if you're just joining us, I just want to acknowledge one more time, I feel ya. I want more squeezes just like anybody else. July was our squeeze month, and we're just going to dub July 2023 the squeeze month. It was beautiful setups that worked out beautifully. It's not like that anymore. So let's start out with the dollar. On the daily, since we're already there, we are running into the daily 50 MA overhead. I don't want to get rid of that. Oh well, shoot. We're looking for a weekly lower high compared to the high of July 3rd. That lower high is most likely set. If we can break bear convincingly below 102.771, I would say that weekly lower high is set. And we have to recognize why gold isn't jumping through this major opportunity of this possible weekly lower high being set. So if you are a member of TCG, I put some articles in here as to why gold futures were likely not popping, because so many people are shorting gold futures to hedge their spot positions, and that can artificially suppress the price of gold. And that's what I think is happening. Now, I'm not an expert on that world, the Chicago Mercantile. I'm just not an expert on it. I know enough to know that it can be artificially pumped or suppressed, and that's what I think is happening with gold. Okay, so we have an EQ forming on the dollar. Let me make a bold statement. The direction in which this EQ breaks will likely dictate the short-term direction of the market, meaning the inverse. Meaning if it breaks bull, I'm looking bearish the market. If it breaks bear, I'm looking for that to be a potential bull tailwind to equities, how this breaks. I mentioned gold, so let's go cover that now, and then we'll go back to the indices. 4-hour downtrend, 8 EMA is giving 0, you know what? And it's just continuing to drop regardless of dollars. Pullback is just not taking advantage of it. We're red on the night. That's just crazy, crazy talk. ES. I hope y'all recognize I am trying to improve marking up the charts. So I know some of you are visual learners, and I try to talk through the process, and I'm trying to get my visual instruments to match up with what I'm saying so you can visually see what I'm trying to explain. Yesterday's high, yesterday's low, potential 4-hour bear flag on ES. 4-hour, that's not what I meant. Lower high watch. Sometimes I type these before my second cup of coffee. 4-hour lower high watch. So back burners are back on the menu. Reverse back burners. We're looking for extensions up to mark temporary tops. What does the crazy lady mean? What marked the high of yesterday? Once the market opened, getting my days confused. It was right. This was yesterday mid. I can't talk. That's not it. I'm lost. Let me go back here. Here's what I was trying to find. Here's the 5-minute overbought yesterday morning at market open. Mark the top of the rally yesterday. Mark the top, 5-minute overbought. I'm going to continue to keep this in my tool belt as long as it's working. Extensions up into 5-minute overbought, marking temporary tops. It happened overnight, 2 a.m. my time, it happened. So 5 minute, and then when that stops working, I'll go to 15-minute overbought, because I will keep this in my brain all day long. What's the most likely scenario? 4-hour lower high, okay? And then look at the daily. What's the more likely scenario? Daily lower high. We lost the 50 MA. Weekly is a different beast. We're looking for a weekly high or low. But we already got oversold, y'all, on the 4-hour here, August 2nd. It did not mark the low. So where is that elusive weekly lower high? Weekly high or low? We don't know where it is yet. Bulls have shown no appetite to put it in. So the 4-hour, 8-hour oversold area is in the 43.91 area. I went ahead and marked that off because now I'm raising the bar for bears. If they could push it to 4-hour oversold, that may mark our weekly high or low. And then I'd back off this bearish idea. I hope that makes sense. I hope you're marking up your charts in whatever way makes sense to you. NASDAQ did the same thing over here. Dang it. We are on 4-hour lower high watch. We're waiting for a push up to short. And this may result in a gap down, a push down into 8-hour oversold before we find our temporary climax bottom. And then shorting bounces isn't going to work today because we reached a climax. I'm struggling in my brain right now to explain this differently, and I don't have any clear analogies. So when we're just bouncing back and forth and setting a lower high, lower low, lower high, lower low, and no speed and max capitulation, we're not finding a bottom. I'm looking for that capitulation where it shakes out that last darn bull, and then we get a good bounce. Then I change my hat and I say I'm no longer looking for lower highs, and I'm looking for that weekly higher low. Right now, this is so methodical. This is systematic walking down of the charts. Now let me show you something fun. This is the 4-hour chart on ES, and I just hit a lot of the things. We got a red dot on July 27th for the trade keeper. These dots, this is the trade keeper indicator. We have not had one errant dot since July 27th on the 4-hour. What does that tell you? As long as the trade keeper is printing above price like it is with red dots overhead, stay short. Just stay short. It's been working. Why wouldn't it work now? Daily. If you'd have taken daily signals, we didn't have one errant daily signal since March 29th. It printed bull all the way up to August 9th. We started changing the trend. And of course, August, the end of July, the Boulder trip marked the end of our little fun squeeze run. So if you have tools like the Trade Keeper, use them. Okay, potential 4-hour bear flag on that. RTY, potential 4-hour bear flag. 4-hour oversold area would be around 1892. Your daily 200 MA is around 1874. Again, I really get a lot of value marking up my charts like this. I hope you do the same. All right, potential 4-hour bear flag. We broke through 35,000. We broke through 35,000 on YM. Now, of all of our lines in the sand, let me show you what I mean. These are some of our lines in the sand from Friday. This is really the only one that remains. That one, Amazon, Tesla. No, excuse me. NASDAQ 15,000, Apple 177, Amazon 137. Everything else is falling. So we only have a few more lines in the sand. Oh, tomato juice. I'll go over it quickly. We already got 4-hour oversold. So in our multi-time frame analysis, in order to search for a weekly high or low, a technical analyst, a trader, can wait for the first 4-hour oversold. We already got that. We already got 4-hour oversold. And then we continue to peter out. So then it's like, I don't care about 4-hour oversold as much as I care about 8-hour now. So here's the 8-hour. So we got 4-hour oversold on all of our major indices. It did not mark the weekly lower high. Then I raised the hurdle of what I'm asking for from the charts. I'm going to go over NTR real quick because I have not been good about looking at Trading View. This is a fertilizer company. It was impacted by Ukraine. We had that big run up. I've already lost track of where the war was. Here, this was the war when it started, and we're just coming down hard, weekly downtrend. Weekly high or low anticipated. No signs of that being put in yet. We're at the daily 50 EMA, but in a downtrend. This is a weak chart. Would not try to catch this bottom. Okay. Okay, where am I going? You're like, I don't know, dummy. You're leading this charge. Hang Seng is down 1.36% and DAX is flat, not really telling us a lot. VIX is peppy again today, but we're not getting through that clear resistance of 1687. So I'd watch that. If we can't get through 1687, that could be a bounce area for the market. Bitcoin. Bitcoin is weak sauce. Weak. Now we have a daily squeeze. If this were to break down, we could get some major follow through below 28477. I'm not saying it's going to happen. I'm just saying this squeeze says we've got some incoming volatility. We're still sideways on the weekly chart. On the daily chart, we're weakening. On the 4-hour chart, we're really weakening. And bears are looking for bounces to short. Here's the mode that you get in on Bitcoin if you're trading it. You wait for reverse backburners. You wait for 5 and 15-minute overbought conditions and short the K-wrap out of it. Look at that right there. Boom, boom, down. Boom, down. Until it stops working, keep using it. Ethereum, same boat. Reverse backburner. Gotcha, Ed Emerson. Thank you for that. Okay. So gold, I've already told you, is artificially suppressed. We went through that. It is weak. You're going to get cut up trying to nail the bottom of this, in my opinion. Oil. And this is what we do in TCG. I stopped out of my first oil short, and then that was day before yesterday. And then I re-entered puts. Let me show you. Here in this Friday's USO puts 74 for $1, and then yesterday I posted my exits of $1.30, $1.50, and $1.99. I still have 10% I'm holding. This move has played out. Yeah, Rob, that's where you get it. Oh, that's funny. Odds favor a daily high or low. Where does that get put in? And then odds favor a daily low or high on a bounce, and I'll be looking to re-short. And the premise for this trade was multifactorial, but I was looking at this weekly megaphone. We broke up higher high, no follow through, higher high, no follow through, lower low, no follow through, lower low, no follow through. So now on a bounce, bears are looking for an 8-hour lower high, and this looks like a bear flag. I'm not bullish oil here either. I love that weekly chart, but I'm not bullish oil here. NG is weak, reverse backburner mode. Apple. Oh, why you got to do me like that, Magnet? It's all about 177. When we reach 177, bulls have been buying the dip. When that changes, there will be a significant shift in character, and then the bears could have more follow through. Until then, 177 has been a buy spot, and if it breaks 177 and hits 176, drops below 176.50, that's a different animal. Amazon is still holding its line in the sand, 137. And NASDAQ, 15,000. After that, those three are lost. It is game on, bears. It's been game on. Amazon is attempting to hold this daily higher low. If we lose 137, then look out below. We could be having a gap fill. Again, Amazon has been strong. They had great earnings. But if you lose 137, that is a major short signal. Don't forget all your gap rules for things that are gapping up or down. NVIDIA. NVIDIA, daily low or high is the more likely scenario. They've made enough room for a higher low. They have earnings next week. They got to upgrade this morning. 437 is the key level on NVIDIA. If we lose that, we could have more incoming consolidation. Right now, we just have a tightening hourly pattern. I'd be looking to bottom fish 437 and flip to a bear if 437 is lost. Tesla is weak now. Tesla, I got a little bit different flair. I have my notes off screen that I copy and paste for TCG members. So we're gapping down on Tesla. This could be a climax bottom. When we open, we will most likely be daily oversold. We are not in a weekly uptrend anymore, so it's not as important. However, we are looking for a monthly higher low with daily oversold. I'd be interested in this flush it down to like 225. I would love a possible long on Tesla on this climax flux. Every time more news, no, I shouldn't say that. They had news come out of them reducing prices in China again, and it is negatively affecting them. Chewy. Dang it, this bounce is already happening. Shoot. I was looking for a weekly bottom fish of 29.10 for a potential climax bottom because it was gapping down earlier. This still may be a trade setup, buying against $29 and stop out quick if it's lost because this is a train wreck. Speaking of train wrecks, and my thoughts and prayers with everyone in Hawaii in that horrific tragedy. Hawaii Electric has been significantly punished for this. Not saying that they don't deserve it. We're down 65% in a little bit over a week. So I'm looking for tightening ranges, stair-step patterns on HE for a potential climax bottom fish. This is ninjas only. You have to use stops or you get, let me type this out for those of you who don't understand my accent. Use stop losses or you get wrecked. Lulu. Lulu has a nice daily squeeze. You see this high compression squeeze? 4-hour squeeze, hourly squeeze. Is this going to give us one of our July setups? Come on, Lulu, you can do it. The Lulu dupes are so good on Amazon. I know for sure I don't spend as much money at Lulu as I used to, but 382.40 is your support. You could look for a potential bottom fish. That's the last wick low on the hourly chart yesterday. I'm looking to see if this can bust open, and I'll put Lulu over here. I got to get rid of one of these charts. I figure out which one because I really like that setup. And I like HE high risk. Netflix broke the high of Monday, 428.85. It broke it 429.11 by 26 cents and then fell down. So on Netflix, potential daily bear flag. Watching for 5-minute reverse back burner. Short. So I'm looking at this daily bear flag and I'm trying to find a place to enter on a bounce. I'm looking for a bounce to short. Give me a stair step to short. So those are my 4 Queen of the Mountain. I also realized yesterday I feel pressure every morning to give y'all 4 Queen of the Mountain trades. And I'm going to get rid of that pressure because it's my show and I don't have to do it. So I will back off the 4 Queen of the Mountain trade ideas if they're not my primo setups. And I would say Lulu and Netflix are closer to my regular setups than HE or Chewy. HE is high risk and so is Chewy. Okay, Target beat earnings. No, they actually beat on EPS, lost on revenue. And they cut guidance. It's being perceived positively now. This is a gap scenario. Gap rules apply. If bears are unable to fill the gap into yesterday's range, that is to be taken as a bullish signal. Gap rules. So gap rules are, this is a gap on target, we're gapping up. If bears are unable to penetrate yesterday's range and bulls are able to turn and burn, that's a bullish signal. That shows the bullish strength if bears can't take it into yesterday's range. That's gap rules. If you could hit that like button, that'd be wonderful. Give me a follow on Twitter at ChartGalLori. I'll look at coin. Probably weak because Bitcoin's weak. Nope. Oh, they got news futures. That's right. They can trade futures now. They got approved. Something like that. I would wait for tightening ranges to trade. I still like this one short. Despite the news, I would stay away from this one. I will stay away from it. Thanks, Joe. Y'all hit that like button and have a wonderful day and use stop losses.